Everyone, it's Chris from Axel as well as Solstice. You can find us on both websites for retail as well as institution. We use this weekly video for the short term market volatility that's happening in the global markets as well as domestic. Check us out on Discord, get in contact with us on X. And if you have any questions, please let us know. Remember, we're not a broker dealer. Our performance doesn't give us any indication of future results. We trade equities, options, futures, as well as commodities. Make sure you understand that. And I will go over this in a small, short 10-minute brief video what the outlook will be in the coming week for the stock market. Remember, there's a geopolitical things that are happening in the overall market due to the Middle East crisis in regarding oil, Iran, and the escalation of the distribution of it, and we'll look at the VIX. First of all, I put the S&P 500 up here in relationship to what is smart money, what is dumb money. The smart money is the institution people that are like the turtle whenever they are buying and getting in and getting out of the market. It takes them a little more while to reposition themselves. The dumb money is basically the retail clients such as ourselves. We're the little puny little guys that are running around trying to get in and get out of. We get our emotions involved. And basically, the smart money is the blue color. The dumb money is basically, the rabbit that's running, in and out of the positions very quickly. And we can see that the retailers are trying to get out as fast as they can, while the smart money is, on the dumps trying to stabilize the market to go back up, and they are buying a little bit more their positioning. So let's go to the next slide, and you can see every time they cross, they show you the dips and the reversals when they peak at the bottom and valleys in, canyons. Let's go to the next slide. What I did, I put the NASDAQ 100 here, E-mini micro, is showing you the daily chart since the July of 2025 lows to the high that we created in October of 2025. And in 2026, you can see the high here. We duplicated the top. And eventually, every time when the 18 and 50, the 18 is the blue one, and the red, and the 50 is the 50 SMA in yellow. We crossed here. We became bearish. We had that double top here. And I gave this video out a couple of weeks ago, and I said, pay attention to this area. We couldn't clear it. We fell back in. We tried to rally back up. We came back into this bottom distribution of the consolidation because this is considered supply at the top. We kind of on Monday looked up. Tuesday was an inside day, but rallied and came back in to close right above the Monday. Wednesday was inside the doji star candle, and eventually Thursday, Friday we sold off. We lost the 200 SMA, and you can see I have that this is kind of considered consolidation before the breakout. That was, the J. Powell, tariff warning when we fell down, rallied up, came back in. We rallied. We couldn't clear that double top and all the situation. We got escalation, in the Middle East, and things are, due to the oil distribution, 20% out of that area is causing a little bit of electricity in the market. So we got to look at the VIX as well. We can see I put that uptrend channel up here from the July. You can see that it connects very well to this area, and we lost it once, rallied up. If we lose it this time, we have the 200 SMA above us, the 116 and the 50. So I'm paying attention to the backside of this consolidation before the breakout. Do we get to the backside of this channel and bounce off and get that support where the breakout happened, or do we reverse back? Remember, the situation in the Middle East can change on an instant, and it's going to depend what the distributions are happening on the oil and the vessels in that territory, as well as, the Iran Israel war, and I don't want to go into politics, but you have to pay attention to it. So let's go to the next slide. Remember where to check us out, get in contact with us. We're here to help. Give us your commentary. Let us know what you want. Let's go to the first slide up here. I'll put the S&P E-mini micro, which is the SPY. And I wanted to show the same area here. I did not put any fibs other than the volume profile, value high, point of control, and value area low. You can check some of the other videos that I've done about market profile. You can see that was the tariff interest rate, J. Powell. Then the reversal back here on the tariff rallied up. We did that kind of triple top. I consider this is a shoulder, this is the head, this is the shoulder. We tried to go back up, couldn't, and eventually the S&P gave up, tried to rally, couldn't get to the 18 SMA, and we fell back down. We lost the 200 SMA. So on the weekly, I'm going to show you how to look at this chart. I will show you the measurements, measured moves on it, and I'm going to go over the VIX and Bitcoin. Let's take a look at the VIX, the electronically traded fund on the VIX. And here we can see that the VIX on that push up, every time we got back to that territory in the 27, we rallied, we got that sharp move up, then eventually fell back in, trying to rally, but we are in that higher territory. You have to pay attention very clearly on that area to make sure that we don't end up getting caught on the wrong side if we get more pushes or pushes down. Remember, this video, I'm doing it outside the office, so there may be a little bit of background noise on the charts. So pay attention to the VIX, and I will show you micro BT. He's the micro BT. We were, consolidating, trying, to rally. We are still in that uptrend. We looked up into that territory. You can see that back downtrend channel. We double topped and eventually failed here on that leg up. And I said, pay attention in case we break up. This is a rounded bottom. This is the cup of it. If that cup doesn't clear and clear the F3, which is a 38.2, which is around the 74,600, 750 in order to run to the 50 SMA, as well as the Fibonacci, the 50% from support to resistance. Maybe this is going to be, a reset back down to the backside of the breakout, or do we eventually come back, clear this channel going further up? So pay attention to Bitcoin because, there's as well, currency wars and how they're going to treat oil. So let's take a look at a micro CL crude. And I wanted to show the micro CL because of the volatility and the breakout we had. You remember the $80 range for a while up here. I left it on the chart, so we don't no longer need it, remove it. So we can see that big spike up, from that $65, $68 rally up, clear the $80, $85 up. We pushed as high as 119.49, fell back in, and now crude is pushing back up due to the, Goldman Sachs, JP Morgan, BlackRock, and Blackstone. They are hedged differently, and the PE ratio for the S&P 500, when we look at it, if it's 1-to-1 and what the outcome will be in the next following year, does the Fed change rates or not? We have to pay attention to it. That's on the crude. Let's take a look at the Mag 7 Mag 7 Mag. Okay, that's the Magnificent Seven. I will show you that in Apple, Amazon, Google, Meta, Microsoft, Netflix, as well as Tesla. We can see that we are in that downtrend. Every time we try to look up, we eventually fail the 200 SMA. This area is very important because this was the consolidation before that move up. Consolidated, tried to go up, fell through that consolidation. We're coming back in. We lost the 200 SMA. So I have my eyes on this little area down here in that consolidation before the breakout, because you can see we looked up, failed, came back up, tested it. We had that, a little bit of volatility here, and we rallied. So this area, the backside of this channel, is very important. We're going to mark it just in a little box or an oval. We can mark it like this and just mark it in case we come back to this area and reverse back out. And if things change in the global markets, and things calm down, then we may have a reversal back there, because these sectors are very. I'm going to give you IGV. There's IGV here. You can see the reset on it. Does it lose that 18 SMA, or does it create a small rounded bottom at the 61 or the 50%, or reverse back from F3 back up? So we're going to pay to these sectors out there in IGV. Let's take a look at S&P 500, like I told you, or the SPY. I'll show you how to do the measured move on the SPY. You can see the value area high, value area low, and the point of control. I marked them here. You got the Fibonacci from the high to the low here. That was supposed to be support. You can see the 200 SMAs here, and we got that big area because of the interest rate and the tariff. If we come back to this area, or the consolidation of this before the rally up. So I'm paying attention to that downside trend channel. So you can grab a regression channel down here like this, put it here, does it hold it or not? And we have a sharper one, coming in from here to here in case there is in that wedge a reversal, or we do duplicate the distance from here to here down to here. So I'm going to show you how to do the measurements on that chart. Remove the drawing. So at least you can tell how to look at things. We're going to do time frame. We're going to go 20 days. We'll do 30 days, 6 hour. So what I want to do, this is the weekly low. This is the weekly high. I'm going to do the measurement. You can see the machine grabbed the prior 2 weeks range. So I'm only going to grab the measurements and I'll show you how to look at it. This was this week's high and this week's low. You can see the extensions from 100 to 200 up, going up, and as well to the downside. What I'm going to do is change the color on it, edit the property so everyone can see it. You can add these lines from 0 to 100 on the Thinkorswim platform, and you can see the extensions to the bottom, minus 0.25 all the way to -1, and vice versa, +1 all the way to +2, and you can add them. I'm going to change the colors. I usually have them colored for the weekly. I do them cyan color, so I use blue. For the monthly, I use one color like an off yellow or an off-white or gray, and for the annual, I do the coloring for the Fibonacci's, not the measured move. So, and I'm going to extend that back, going back till February. At least you'll see what I'm talking about in that console. Or we can go to January 1st of 2026, 01, push OK. And what I'm going to do is go back to the daily so everyone can see it. Time frame. We're going to go daily, and we're going to use here at least 9 months. I'll just do 9 months so everyone can see it. You can see that consolidation. If we end up losing the zero line, there's a 23% between the 25, there's a 23 between the 23 and the 50%, you have a 38.2. So this area of consolidation is very important. Or do we fall all the way to the 50% and find support and reverse, or do we reverse back between the 2023 and reverse back up? So we got to pay attention to the short time frames, because if I extend this a little further back, edit the property, I'm going to extend it all the way down. Instead of, we're going to go to 12, or we'll go to 9, 0, 9, 9. Hold on. We'll do, since we did this, we'll go to 6, 25. So everyone can see. I'm just using round numbers for everyone to understand, because you can see that 50% and that 80%, there's a 61 point and a 78. This area here is very important, because this is part of the consolidation, the look up, come back, retest, bounce up, retest, and rally up. So this area is very important for me. If there's going to be support on the SPY, you can do the same thing on the you can do the same thing here, and at the same time you can do the micro and Q. So I'm going to keep this short and brief. Like I said, if you have questions, please get in contact with us. We're here to help at https://solstice.axel.atrai.com, or for the institution, you can get in contact with us at axel.atrai.com. Take care, give us your commentary, be safe, and see you around.